Welcome to the Wealthy Life Club Masterclass. I'm Sybil Verch, host of the Wealthy Life, and our 30-minute masterclasses are designed to educate and empower you to make smart financial decisions so you can make the most out of what you have and live your version of a wealthy life. Today's webinar is about reverse mortgages, how to tap into the equity in your home. With the rising cost of living, perhaps you're feeling a little bit house rich, cash poor. Whether you're navigating the financial complexities of a gray divorce, facing rising home care costs, planning essential home upgrades, or helping your kids or helping your grandkids with a down payment on a home, this webinar is for you. If you have a question you would like answered today, please enter it down below in the Q&A box. We'll do our best to get to as many questions as we can. And anything we can't get to, we can follow up with after. I want to give an important disclaimer. As always, this webinar is for information purposes only. Please, please, please seek independent professional advice before taking any action on anything you learn. It is now my pleasure to introduce Vivian Gochi, Senior Vice President Customer Experience for Home Equity Bank. With over 20 years working in the financial industry, Vivian brings a wealth of knowledge. She leads Home Equity Bank's marketing and customer experience design and delivery teams. And today she will share with us everything you need to know about reverse mortgages. Vivian, welcome and thanks for being with us today.
Thank you, Sybil, for having me. This is great. I've been looking forward to this for a while.
Now, what city are you in at the moment?
Toronto. It's a very foggy day outside my window right now, but you know, it's winter is here. It's with us, so it's to be expected that it's getting a little bit snowy and a little bit dreary outside.
That happens. I'm in Victoria. It's quite nice, and I see we have people from all across the country joining us today.
Incredible.
So let's kick this session off with an easy question. What is a reverse mortgage?
Well, thanks for asking, Sybil. So a reverse mortgage is very simply a loan that's secured against the value of your home. But really, when you think about it, it is an easy way for you to access the savings that have been accruing in your home. So if you think about this, many Canadians made a very, very incredibly smart financial decision many, many years ago in that they purchased a home. And that home has appreciated over time. Canadians have been very good and very diligent. We tend to be very good about paying down our mortgages. And over time, what you find is that you have this equity that has grown in your home. The challenges is over time, you know, pensions have disappeared, and even the ones that are still around, the values of them haven't quite kept up with inflation. And our savings haven't also been growing to the degree that they've needed to in order to help finance our retirement. And so that's why reverse mortgages have grown in popularity, because they're a way for you to access the value in your home without having to move or sell. So if you can think about the fact that when you're in your later years, you actually value your home so much more than you did maybe when you're younger. And so this is a way for you to access that equity, that savings that you've worked so hard to secure over the years without having to sell the home. And so
which is a huge plus. I can see that for so many seniors.
Exactly.
And your home is your home. It's where most people want to be and want to spend their time. And to be forced or feel financially trapped, the other option is maybe to sell. And that is just not really a great option for many people out there.
Well, it's so you mentioned it. First of all, there's an emotional attachment to your home. It's where you raise your family potentially. You're familiar with your neighbors, your neighborhood. You're just familiar with, you know, the inside of your home. And I think as we grow older, that becomes more more important to us, to be in a place that feels safe and familiar to us. So I would say that there's an emotional component there. But then on the other side as well, if you're going to sell your home, downsize even potentially, it's not as straightforward as people think it is. First of all, there's a lot of fees associated with that, a lot of costs. So if you think about, there's the commission costs for having to sell the home. Then there's land transfer taxes. And I just looked this up, Sybil. I don't know if you know, but in a $1 million home, in Toronto right now, the land transfer fees are topping over 3%. You can get up to
Wow.
7.5% land transfer taxes in Toronto right now. I mean, that's on the upper end of the spectrum for really high priced homes. But this is the arena that you're talking about here, just in land transfer fees. Then you have to think about, well, you had this home and now you're going to downsize. The furniture that worked in your home probably doesn't work in a smaller space. So now you have to refurnish the whole place. And then if you're moving into a condo, there's condo fees to account for. If you're deciding to rent, there's rental fees. So there are a whole host of other things that you have to take into consideration. And when you do the straight math, the numbers just don't seem to kind of add up to make it a very straightforward decision, shall we say, especially when you factor in all the other factors, such as the emotional decisions around the memories and also wanting to stay close to the place that you're most familiar with.
Well, that's a good point. I know my in-laws have been in their home for, oh gosh, close to 60 years, or maybe about 60 years now. And the joke is we'll be pulling them out in body bags because there's no way you're getting them to leave that house before then. And I
It's
hope that's not for many years to come.
No, and you know what? The interesting thing is, I don't know, you've experienced it, I've experienced it. Actually, the older we get, the more we want to stay in that home.
But staying in the home also costs some money. So I think about even my in-laws, and as they're getting older, they're starting to need more and more assistance. So right now, my husband and I can go and mow the lawn and do the repair work and fix things for them. But at some point, they might need more cleaning and cooking and other health care. And they're on pensions, fixed pensions. So where do they get that money to help fund all those extra expenses that may pop up over the next decade? And a reverse mortgage is really a viable option. So you talked earlier about a reverse mortgage. It's essentially a loan, but it's a loan that you don't have to make loan payments. And I think that's a big difference. So maybe you could just walk our viewers here through what the process looks like, how it works.
Absolutely. And so I'll be upfront and explain to your audience right now, to those of you listening in right now, that our reverse mortgages in general, tend to be a bit more expensive than a conventional mortgage. But the benefit of doing that, of having that higher price product, is that you don't have to make the monthly mortgage payments. Why does that matter? Well, for example, if you have an existing mortgage, maybe you're having to make regular payments, and not having to make those regular payments frees up a lot of monthly cash flow for you. That money
Yeah.
that you can use to live, maybe money that you can use to put away every month so that you can go and take that vacation that you've been wanting to take, maybe take your kids, take your grandkids somewhere. So that's one factor of the equation. And the reality is even if you've got your mortgage fully paid off, now all of a sudden you have this ability to access all this cash, and you can access it potentially all up front, or you can access it as a monthly draw over time. So you have the
Oh,
flexibility of doing that. And all of a sudden, again, you have all of this extra flexibility in your lifestyle to be able to do more of what you want in your retirement. All those things that you've been
yes.
thinking about. And what we're seeing is people are coming to us because, especially with the most recent inflation that we've seen, people are finding it tough, even if they have an existing pension. They're finding it difficult either to make ends meet the way that they used to, or to do the little things that they've always dreamed of doing. We had a customer recently that came in and spoke to our company, and she was a nurse. She was on a nursing pension and CPP and all your standard government benefits, but she couldn't quite justify or be able to make the numbers work on taking this vacation that she'd always wanted to take to Mackinac Island. And so she came to us and she finally managed to make her dream a reality. And all she wanted to do was go visit Mackinac Island. She had watched the movie Somewhere in Time with Christopher Reeves,
Yeah.
and she just fell in love with it. And she always imagined doing that for herself. And so we were able to help her with that dream. She sent us pictures. It was so lovely.
Oh, so, it's a great way to access the equity money that you have tied up in your home. It is a loan, it's a mortgage, but you don't have to make any payments, which is
Mhm.
good. You mentioned it's a little bit more expensive than conventional.
Yep.
Is that in the form of a higher interest rate?
Yes. So a couple of things. Let me just explain and do a bit of a walkthrough of how it works for everybody online today. So one of the things that you do have to pay is the interest rate. Now, here's what I will say. I did say it's higher than a conventional mortgage. What people are usually surprised to hear, though, is that it's not as high as you may think. So right now, I just checked my line of credit. Right now, TD, I know it's a certain point in time. So we're talking about it's December 10th, December 10th, yes, today. And right now, my interest rate with TD is just under 6%. Our 5-year rate, our special 5-year rate right now is at 6.69%. So
Oh,
we're not talking about a
no.
huge difference here in interest rates. So when you compare it to a home equity line of credit, you're not talking about a huge difference. Some of the other things that you have to pay is obviously an administration fee to set up the mortgage. There's an appraisal cost that's involved. These are
But you
standard
have those for any mortgage.
these are standard costs that you have to incur with regular mortgages as well. And then the one other thing that you have to do, because we do require it, it's part of our process, it's a very important part of our process, is we do ask all of our clients to get an independent legal assessment.
Yeah.
So they go to their lawyer and they make sure that they review all of the paperwork with their lawyer to make sure they understand what they're getting into, what this is all about, what their obligations are, because it is a loan. And so therefore, everybody's on the same page as to what is happening, when, and how the money is dispersed and what the obligations are.
Yeah, because once you get the money, whether you take it in a lump sum or you take it in monthly payments for life or for a certain time period, it's you got to pay the piper at the end of the day. So at what point is the loan due? When do people have to pay it back?
So this is the great news also about a reverse mortgage. There is no set time period. So we talked about our 5-year rate. That's the term for the rate, but you do not have to repay the mortgage until you move or sell. So provided you're keeping up with your taxes, your municipal taxes, providing that you're keeping insurance on your property, you do not have to pay us back until you're ready to move or sell. At the time that you're ready to move or sell, you sell your property and then you pay us back from the proceeds of the sale of your home, the principal that you borrowed, plus the interest that's accrued over time.
Right. And when you're not making payments, you've borrowed money, it's
Mhm.
going to compound and grow the amount you owe back at the end of the
Correct.
day.
Correct.
But people retain their home ownership and also retain the growth in the market value of the home.
That's
So
the
hopefully
magic.
those offset.
That's the magic, Sybil, right? Usually I talked about Canadians being a conservative bunch. Usually people are borrowing around $200,000, for example, on average. But they have this, $1 million home, for example. Well, that $1 million home is appreciating in value. Um, And so the $1 million, let's assume that it's appreciating value, even a conservative, 3% per year.
Yeah.
That money is going to more than cover and offset the fact that you've borrowed a certain amount of money at the current interest rate for our product. We do absolutely look to make sure that people have some form of remaining equity at the end of the loan. That's the ideal situation.
That's great. And although the interest rates are a little bit higher than maybe on a conventional mortgage, it sounds like right now there's not too big of a difference. But how does Home Equity Bank set that rate? Is there a formula they use? Would
Um,
people know in advance? And is that rate, does it change every 5 years?
so the rates are published on our website, so people can go on there to see that. And then once they are coming near a rate reset period, they can also go to our website to see what the current interest rates are at the time.
Okay, so it's not necessarily a prime plus type of a formula for
There,
calculating.
we do have a variable rate option. So if you prefer to, go with the market flows with, variable rates, the last couple of years, maybe that wasn't the most ideal situation for people who are a little queasy about interest rates going up.
Yeah.
But then when interest rates go down, maybe that's a good thing for people because, they get to take the benefit of rates going down as they go down. But we do have a variable rate option,
Okay.
in addition to having 1, 3, and 5-year terms.
At what age does someone need to be eligible for a reverse mortgage?
55. So that's why we always say we love Canadian homeowners age 55 and better, because I do believe that we only get better with age.
And do
That's what
both,
our most recent research has shown.
well, I like to say we get better with age. Do both people, both homeowners in a marriage situation need to be over the ages of
Correct.
55? Okay,
Yes.
which
Yes.
is good. Now, a reverse mortgage is not suitable for everyone. Can
Mhm.
you give us just a real quick high level overview of who is it most suitable for and who is it not suitable for?
Right. So if you are someone who's looking for something shorter term, or you're not sure if you're going to be in your home for the next, let's call it 5 years, I would recommend exploring different options. We do have a short-term product. It's an open product. It's called Chip Open. But I think that's better suited for individuals who know, for example, that they are going to be selling shortly and they'd like to use the proceeds from a reverse mortgage to maybe make some upgrades so that they can
Yeah.
maximize the value that they can get from their property. So I would say that, if you're looking for something shorter term, this might not be the solution for you. The other thing I would say is if you're 100% comfortable making monthly mortgage payments, then there's, other options out there for you, like that home equity line of credit that we talked about.
Yeah, and I'm going to share, there was a slide that you had shared with me, and I'm wondering if this is still valid. So have a look. An ideal fit and not a fit. Can you see that? Okay.
Yep, correct.
So, it does make sense that if you've got enough cash flow and enough income and you don't need to tap into the equity in your home, well, why would you take on debt unnecessarily? Um, Hobby farms and acreage maybe aren't eligible. Is that why it's listed on not a fit?
That's correct. Yes,
Okay.
that's right.
Um, and then if people have too much debt already, it may not be a fit. And obviously the large spousal age differential, it's going to make a difference on, yeah, maybe when it's repaid versus one spouse still alive. I guess, yeah, there's
Yeah,
lots of
the
moving
the the
parts.
amount that you qualify for might not be enough to meet your needs if you've got a much younger spouse. That's one of the areas where, having a much younger spouse might not be a benefit.
Yes.
But but I would say that that's true. The high earned income, again, that's also true. That's where we mentioned, yeah, maybe at that point in time, if you don't have a problem making monthly mortgage payments and it's not an issue for you, then I would say that that's probably a good place for a home equity line of credit, as well as the fact that a high earned income is going to allow you to qualify for one. If
Yeah.
you don't have that high earned income, you might not be able to qualify for a home equity line of credit.
Well, and in the situations I see most commonly used myself personally would be aging, like people getting like their 80s and even older, where they do want to stay and age in place and they do need extra cash flow to fund the care associated with that. So that's a
Correct.
great way to tap into that. I'm
Yeah, that's
also,
the traditional like home rich cash poor type
yeah.
situation, right? Yeah.
Exactly.
Yeah.
And I also see a rise in what we call gray divorce. So couples are getting divorced much later in life for whatever reason. There's actually an interesting study. Apparently, women get bored of their husbands by this one study. That's terrible, but there is a study out there. But anyways, if they're going through a gray divorce, and you think about if they've got all registered assets, not a bunch of extra investments, non-registered investments, and they're home. How do you split the assets? And so this is where a reverse mortgage may come into play to help create some cash to separate the assets.
Correct. Correct.
Good. Okay, well, I'll stop sharing that screen. I want to shift gears a little bit because we're almost out of time. I think I've answered most of the questions that have popped up, but I'll keep an eye on that as we go.
Perfect.
But um, you guys did a study, a recent study. I believe it was just Canadians, and there were some really interesting findings. Can you
Mhm.
touch base on that a little bit?
Yes. So well, this is one of my favorite pieces of research that we've done because, I like to say that it shows us that the best is yet to come, and it truly is um, something worthy of looking forward to. So what we found, Sybil, is that the older we are, the happier and more satisfied with our lives we tend to be, and so and really what we were seeing is this dynamic with younger, older Canadians, let's call it that, really having going through a lot of still major life stages, whereby if you are in your 50s, for example, you're still having to make some fairly large financial and life decisions that, could be causing a bit of stress. Whereas when we're in our 70s, like 75 plus, we're past those stages and we're feeling more secure in our retirement lifestyle and where our money is at. And we're feeling happier and more stable because of it. And so we kind of called
Yeah.
it the golden triangle of happiness, because we see it as, a triangle has three peaks, or 3 points. And so what you think about is you need financial stability, you need social connectedness, so the quality of your friends, your family, all those connections, and then a sense of purpose. So what are you doing with
Yes.
your time? And so if you have all those pieces in play and you have them in balance, chances are you're living a happy life.
Well, and everyone wants to live a happy life.
Yeah,
A happy life is a wealthy life, and wealth
exactly.
is more than just money. But money does help to a certain degree. And
It it is an underpinning, right? Because it allows you. So think about the underpinning of financial health when it comes to the things like increasing your level of social connection. Many of our customers just love the freedom of just being able to say on Friday night, I want to take my family out for a nice dinner.
Yeah,
Right?
yeah,
Or they have some extra funds and they're able to donate to their favorite charity, or they're
yeah.
able to have the time and the peace of mind to be able to give back and do something in their community. Like, isn't that nice, right? And so
Well, it is.
having financial, means that you can actually do some of those things.
And that actually ties into one last point I want to make about the benefit of the reverse mortgages for certain individuals, but is seeing your wealth in action while you're still alive. So that might be helping your kids or grandkids with a down payment on a home, taking them on a family vacation, donating to charity. I mean,
Yes.
maybe actually in the donating to charity gives you some additional tax benefits while you're still alive, but you can actually see your money in action. You can't take it with you.
You can't take it.
We're almost out of time, but I do have two more quick questions back on the
Yes.
reverse mortgage. So number one,
Okay.
what happens if the loan compounds to be bigger than the value of your home when the time comes to repay it? What happens?
Well, remember that magic formula, right? You have that home that's appreciating over time as well. So, listen, worst case scenario, they decide to build a nuclear waste plant in your backyard. I don't know, something happens, your property value doesn't appreciate the way it should.
Yeah.
You are protected. You're guaranteed to never owe more than your home is actually worth. So that's
And
the
that's the
ultimate.
beauty. So all
That's
the
right.
risk is taken by home equity bank, but that's why you have parameters in place when you do the underwriting or when you do the lending in the first
Yeah.
place.
So slightly higher interest rate, but
Yeah.
no monthly mortgage payments, and you are protected as well.
And I assume if people already have a mortgage outstanding,
Mhm.
can they still get a reverse mortgage for the difference, or how does that work?
They should definitely call in to find out. It really depends on a variety of different factors, including how much the value of the loan is. So in that
Okay.
slide that you put up earlier, we talked about if you have a very high mortgage amount, you might not be able to qualify.
Yeah.
What we do require is that we be the first charge. So mortgages carry a charge with
Right.
them. And so we would pay off any existing mortgage
Right.
with the proceeds of what you qualify for with the chip reverse mortgage.
So there's
And
a
then
way to
that
make it
way,
work.
that's the way, and that's the beauty of it, right? It converts a mortgage that carries a monthly payment to something that doesn't require a monthly payment, which
So
for
frees up
most of our
even more cash.
customers, they basically tell us, I wish I had done it sooner. That's the most frequent comment that we get is, I
Yeah.
just wish I had done it sooner, because it's just such a relief, and it makes people be able to literally, some people tell us, I can now sleep at night.
Vivian, well, thank you so much for sharing all that information today. Where can people go if they want to learn more?
So two different avenues. You want to continue doing research. We love that. Come to chip.ca. There's a host of resources there for you to continue learning. But I have a very special offer for your audience that's listening to us right now. We have a very limited number of books. But if you do call us, here's the book that we have written. My boss, Yvonne Ziamecki, is one of the co-authors, and it is a chock full resource full of great stories about retirement, about people who have considered their options, how they've gone through this journey and at this point in their lives. I have one of my favorite all-time customer stories is in the book, but that's maybe a story for another time, since you had so many questions. You might have to invite me back. But the number, if you want to take advantage
Yeah.
of the free book offer, I'm going to repeat it twice: 1-866-558-2447. You should give them my name. Tell them they saw me on a webinar. So Vivian Gauchi, I was on the webinar, and I said that you can have a free book. We have a very limited number, but I would
Great.
love to give it away to anybody in your audience who's interested in learning more. We find that people who do get the book, they read through it, they come to us, they say, I was having a lot of questions, but I read the book and now I'm convinced and I'm ready. So I love it when people
Fabulous.
actually take the book and read it, and that they make their own decisions ultimately.
And I will also add, for people, they can reach out to their financial advisor and ask their advisor for more information. If their advisor is not familiar with reverse mortgages, they can contact us and we can point them in the right direction. That's a wrap. I want to thank everyone for their time today. I would also like to hear from you, everyone that attended today. What would you like us to cover in a future master class? Send us a message. Don't forget to follow us on Facebook, Instagram, LinkedIn, YouTube, and X. Used to be Twitter. So thanks for joining us today, Vivian, and thank you all for coming. See you next time.
Thanks for having me, Sybil.
Bye-bye.